Should governments implement land value taxation? Hi everyone, today I'd like to discuss an idea that has fascinated economists for more than a century but remains surprisingly uncommon in practice. Should governments replace part of their tax system with a land value tax? Most governments finance public expenditure through taxes on income, consumption, corporate profits, and property. These taxes generate substantial revenue, but they may also discourage work, investment, entrepreneurship, or consumption. This has led some economists to advocate a different approach, taxing the value of land rather than the activities taking place on it. The proposal, most famously associated with the political economist Henry George, is known as the land value tax (LVT). Supporters argue that land occupies a unique position in the economy. Unlike labor or capital, land is perfectly inelastic in supply. No matter how high or low taxes become, the total quantity of land cannot increase or decrease. Consequently, taxing land does not discourage its production because no one can produce additional land in response to market incentives. This characteristic distinguishes land taxation from taxes on wages or investment, which may reduce labor supply or capital formation. Another argument concerns the origin of land values. The value of urban land often increases not because of actions taken by the landowner, but because of public investment and economic development. When governments construct subway systems, highways, parks, or schools, nearby land prices frequently rise. Similarly, population growth and commercial activity increase land values even when owners make no productive improvement. Economists describe this increase as economic land. Income derives from ownership of a scarce resource rather than productive effort. Supporters argue that society should capture at least part of this unearned gain through taxation. Land value taxation may also reduce speculative behavior. Some investors purchase valuable urban land and leave it underutilized while waiting for prices to appreciate. This practice can restrict housing supply, increase real estate prices, and encourage inefficient land use. A tax based solely on land value creates an incentive to develop land more productively because owners must pay the tax regardless of whether the land generates income. However, critics identify several practical difficulties. Accurately separating the value of land from the value of buildings is often technically challenging. Assessments require sophisticated valuation systems and frequent updates to reflect changing market conditions. Errors in valuation may undermine both fairness and public confidence. Another concern is the distributional impact. Many homeowners possess valuable land but relatively modest incomes. Retirees living in rapidly appreciating urban neighborhoods, for example, may face increasing tax burdens despite limited cash flow. Without carefully designed exemptions or deferred payment mechanisms, land value taxation could create financial hardship for certain households. In my opinion, land value taxation deserves greater attention because it taxes an economic base that is both immobile and largely created by society rather than individual effort. Nevertheless, it should complement rather than entirely replace existing taxes. Successful implementation requires accurate property assessment, gradual transition, and safeguards for financially vulnerable households. Ultimately, taxation inevitably influences economic behavior. Among all major taxes, the land value tax is unusual because it raises public revenue while creating relatively few distortions to productive activity. For that reason, Many economists regard it as one of the most economically efficient forms of taxation ever proposed. So here's my question. Should governments rely more heavily on land value taxation, even if doing so requires reducing other taxes such as income or corporate taxes? I'd love to hear your thoughts. Thanks for listening. See you next time.